Good morning, everybody. It's Monday, August 12th, 5:25 a.m. Central Time. Grain markets are lower this morning. December corn futures down 1.25 at 393 3/4. November soybeans down 4.5 at 998, below $10 for the first time in a long time. December Chicago wheat down 5.5 at 560 1/4. December Kansas City wheat down 7.25 at 563 1/4. December spring wheat down 4.5 at 604. Let's start off with this row crop price action.
So corn and soybean futures posted fresh lows overnight. The December 24 corn contract closed lower on Friday and traded below 394 per bushel overnight. The November 24 soybean contract traded below the $10 per bushel mark overnight for the first time since January 2021. U.S. farmers continue to give up on old crop bushels, while traders eye record U.S. corn and soybean yields. New crop export demand for both crops has been soft despite low prices.
We've got bearish news on multiple fronts here. So farmers, yes, are giving up on old crop bushels, and that means throwing in the towel, selling them. We had a record corn crop in 2023, and the marketing opportunities were few and far between. The best opportunities to market 2023 corn bushels occurred either if you did like really early forward marketing or June or July of last year when we had a drought in place. Those were your best opportunities. Even at its peak this year, their peak this year, old crop futures only got up into the 470s, which is a level that just was not associated with profitability for a lot of U.S. corn growers. So you're in this situation now where there's a lot of unpriced bushels and they're being sold, and that may very well continue through the end of the month. First notice day for August futures is the 30th, I believe. So in the days prior to that, basis contracts, things like that are going to have to be cleaned up. Just because grain's being moved doesn't necessarily mean it's being priced, but I think a lot of it is being priced. Absolutely. We've got a USDA report today, which is not going to be friendly, according to most estimates in any case, but just a lot of negative stuff, ugly price action.
Fund traders continue to hold a massive net short position across the grain complex. CFTC released weekly commitment of traders data on Friday. During the week ending August 6th, the funds were net buyers of 52,000 contracts of corn. The net short of 249,000 contracts of corn is historically large. Funds were net buyers of 13,000 contracts of soybeans. The net short of 157,000 contracts of beans is also historically large. And the funds were net buyers of 5,000 contracts of SRW wheat on the week.
Okay, so funds were net buyers of, what was it, 52,000?
Yep.
52,000 contracts worth of corn, and the market didn't really do much. So you're seeing some short covering without much upside price action. During that same week, there's another group of traders that CFTC tracks, the producer, merchant, processor, user category. That would be the commercial category in the old school version of these reports. They added 39,000 contracts of net short positions. So what that says loosely is that fund buying is being met by farmer selling. And that's why the market didn't really react positively or move higher to any significant extent with this fund buying that we saw here. So the funds can buy 50,000 contracts worth of corn and not really do much to the market in this sort of situation because the farmers undersold with regard to old crop bushels and new crop bushels. When you look at the combined net positions across corn, soybeans, SRW, wheat, still a net short of 477,000. That position was well north of 500,000 to the net short side. So it's come up a little bit, but still very, very large historically.
USDA will release its monthly crop production and WASDE report today at 11 a.m. Central Time. Traders expect USDA to revise its corn and soybean yield projections higher amid strong ratings and mostly favorable weather. A downward revision in harvested acreage, however, is expected for both crops. The new crop U.S. corn carryout estimate is expected to be near unchanged compared to last month, while the soybean carryout projection is expected to rise.
The idea here is that you will see increased yield numbers for both corn and soybeans versus last month. With regard to corn, the production number is expected to be close to unchanged because the trade thinks harvested acreage are going to be cut by 500,000, something along those lines. Soybeans, you're going to see the expectation is that you'll see a slightly larger production number. So USDA this time around in August is going to incorporate its known FSA data, acreage data. FSA, farmers have to certify by July 15th, I think. So they have a lot of this data and they're going to use it in August this time, whereas most of the time they wait till September or October. I don't know that the cut in harvested acreage is a guarantee, we'll see. This is going to be a big deal. This will be the deal today when it comes to price action at 11 o'clock Central Time.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some premium videos from last week?
We can talk about cash grain marketing and capture and carry and options till we're blue in the face, but sometimes discussing the mental side of grain marketing is important. I was joined by my friend Jason Kuhn on Thursday. Jason's a Navy SEAL, and he now works in consulting. He consults with professional athletes. He consults with big corporations, corporate groups. We talked about victim mentality and why this is such a big deal when it comes to marketing, grain marketing, running a business, that sort of thing. If you are of the mindset that you are a victim of the USDA or the Chicago Board of Trade or the grain markets or the weather or the government, is that the case? Maybe you are. I don't know. I don't know who the bad guy is, but you need to shift your focus. And I have seen in my career a very clear divide between those who have this victim mentality and those who take matters into their own hands. Jason did an excellent job of discussing this, some of the best practices. The point of this video was not to make light of the situation that we're in right now. I am well aware that the U.S. ag economy is, we're in the midst of a full-blown recession. I get it. From a dollars and cents standpoint, it's absolutely terrible. But from a mental standpoint, there are things you can do, things you can think about to help improve your outlook, improve your mentality, which will ultimately lead to better results. We had an incredible response to this video. I had people text me and say, Joe, I watched it 3 times. I sent it to my kids. I know people probably aren't going to sign up for the premium deal to watch this, but honestly, you should. It's one of the more valuable ones that we've put out. Friday, we talked about USDA. We talked about USDA with Matt. Till death do us part. Guys, you hate the USDA. They're crooked. They're out to get you. Well, guess what? You're stuck with them until you're dead. So you better learn to deal with it. If you want to see the premium stuff, go to standardgrain.com. You could sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee. No other obligation. Nobody will try to sell you anything else. Report day today is a good day to be a subscriber. I'll have my USDA snapshot video out within 20 minutes of the release.
Hedge funds currently hold a massive net short position across the commodity complex. As of last Tuesday, money managers held a combined net short position of nearly 153,000 contracts across 20 commodity markets. The net short position is the largest since at least 2011. Concerns about a U.S. recession and an increasing supply of energy and agricultural commodities have contributed to the bearish outlook. Weakening Chinese demand and a stronger U.S. dollar are also contributing factors.
So they're using CFTC data here and across this basket of commodities. I think the Bloomberg commodity index is 23 commodities and they've got 20. But in any case, this index doesn't look very good. I guess maybe we held some support last week. Here's an interesting chart. So does inflation have any impact on commodity prices? The answer since mid-2022 is no. You saw a strong correlation between the huge uptick in CPI and the commodity index in the second half of 2020, all through 21, all through 22, or through about half of 22. And then you saw a big divide. So as it relates to corn and soybean prices, I think there had been a question. I had this question myself. Will inflation impact corn prices and soybean prices? Meaning, like, will it present us with a new bottom of the barrel when it comes to these prices? And the answer, I think, is no, because we're back to like pre-COVID levels in corn and soybean and wheat prices. As it turns out, input prices, land prices have been impacted by inflation, but corn and soybean prices have not been, which is very bad. That's why the ag economy is in the poor state that it's in right now.
This season's French wheat harvest is slated to be the worst in 40 years. According to the country's ag ministry, soft wheat production is expected to decline to 26.3 million metric tons, a 25% decline compared to last year. The decline in production is partially due to unfavorable weather. Last year, France had an extremely wet planting season and then minimal sunshine during the spring and early summer this year. The poor crop comes after a winter filled with farmer protests demanding government support and simpler regulations. To get through this challenging year, farmer unions have requested financial support from the government.
In typical wheat market fashion, wheat futures rallied for a couple hours on Friday morning and then just sold off. But we did have some friendly headlines. Not only this headline out of France, but also some friendly stuff out of Russia with some lower crop estimates. France is, as USDA gauges it, they're part of the European Union, and they're about 20% of the European Union wheat crop. if they're going to be 26.3. So they're a big producer. And this headline, along with the Russia headline, again, I think we rallied briefly on Friday morning and then just sold off, and now we're lower this morning. So wheat, just like corn and soybeans, has had a really tough time.
USDA reported multiple flash sales on Friday. U.S. exporters sold 5 million bushels of soybeans to China for delivery during the next marketing year. Exporters also sold 100,000 metric tons of soybean cake and meal to Colombia. Of the total, 12,000 metric tons are for delivery during the current marketing year, and the remaining 88,000 metric tons are for delivery during the next marketing year. And then finally, exporters sold 8 million bushels of soybeans to unknown destinations. Of the total, 2 million bushels are for delivery during the current marketing year, and 6 million bushels are for delivery during the next marketing year.
You're seeing China in for some soybeans recently, but the amounts have been really small. It's like 132,000, 200,000. You're not seeing the large amounts. The new crop book of export sales for soybeans is still very, very poor. New crop commitments to China with regard to soybeans, very poor. New crop corn commitments to China are non-existent. So we still have some export problems. Absolutely. What did cattle do Friday?
They closed higher, but week over week, they were lower. Feeders closed an average of 377 higher on Friday. However, they were down an average of 622 on the week. Live cattle closed an average of $1.92 higher on Friday. Week over week, they were down an average of 244. Cash cattle trade was lower last week. In the Southern Plains, cattle sold at 186, $2 lower compared to the previous week. Up here in Nebraska, cattle sold at 193, $3 lower on the week. And then over in the Western Corn Belt, cattle were $3 to $4 lower at 190 to 193. Box beef was lower on the week last week. Choice closed Friday at 312.71. That was down 523 on the week. And then select closed Friday at 298.59. That was down $1.47 on the week.
Outside markets fairly quiet to start the week. U.S. dollars about unchanged. Stocks are just marginally higher. Bonds a little bit lower. Crude oil is up 89 cents, and the September WTI at 77.73. Have a great day, guys. Remember, report at 11. We'll talk to you on Tuesday.